Good morning, good afternoon, and good evening. Welcome back to the It's Attainable Real Estate Investing Show. It is episode number 19. In today's show, we've got Stewart Beal. Stewart is from Beal Capital and Beal Properties. Beal Properties is a property management company performing property management on real estate assets and investments. Beal Capital leads a fund that allows others to invest in it as it invests in multiple real estate assets. I'm looking forward to hearing from Stewart today on the all-important topic of property management. Hopefully he'll share a tip or two about that. And I want to hear more about that fund he has that allows others to invest in it as it invests in multiple real estate assets. Let's welcome Stewart Beal to the show.
Welcome to the It's Attainable Real Estate Investing Show, where you will learn about investing, the power of real estate investing, and how to invest in it. Whether you have the time or even if you don't, you're going to see it's attainable either way. And now your host, who always wants to share knowledge with you, Christopher Balkin.
All right, so here is Stewart Beal. You heard his bio, and now you're going to hear from him. So, Stewart, I read your bio. At 19 years old, a lot of people are doing a lot of things, but you were out buying property. Tell us about that.
Yeah, so I started my first business when I was 13, just mowing my neighbors' lawns. And when I was 16, I expanded the business all throughout Arbor. And when I was 19, I had 400 customers, and I took on a partner and sold the business for $250,000 to my partner. And I got $50,000 down, and then the rest was paid out over 10 years. And I used the proceeds of that sale to invest in my first real estate deal in downtown Ypsilanti, which was a 5-unit apartment building. And the reason I bought that property is I was going to Eastern Michigan University at the time, and there were 4 apartments that were occupied, and there was one apartment that was vacant. And so I moved into the vacant and did kind of like a supercharged house hack where I lived in one and rented out the other 4 apartments. And that was my first real estate deal.
Nice, nice. So you mentioned a couple of things there. So you took mowing lawns, took the proceeds from that, as you made a business out of it, and then took that into your first property.
That's exactly right.
Nice, nice. Now, house hack. Explain a little bit about that. I talked to the listeners about a lot of different things, but we haven't touched the house hack topic.
Yeah, so one of the ways a young person could invest in real estate or become a real estate investor is by buying a 3-bedroom or 4-bedroom house and then renting it out to their friends. That's what you living there and then renting out the rooms to their friends, and that's what people refer to as a house hack. You might read about that in some of the beginner real estate investment books.
Right.
So I say I did like a supercharged house hack because I did buy 5 apartments, but I did live in one on site and rented out the other 4. Sometimes people I knew, sometimes people I didn't know.
Okay, nice, nice. So that helped you to cut expenses, so you didn't have to probably cover your mortgage and expenses, and maybe help you live rent free.
Yeah, that's exactly what it was. I didn't have to pay rent because the other 4 residents were covering the basic expenses of the property. I did a lot of the work myself as well, along with my father, who owns a construction company and is very handy with skills. And so we renovated that 5th apartment while I was actually living there. We tore down a couple of walls inside there and made it a nicer, larger unit.
Nice, nice, nice. So that was your first property. What got you into real estate? What was your interest? What were you looking to get out of that besides being able to live rent free?
Yeah, so when I was a teenager, I read pretty much every business magazine that was published every single month. So I read thousands and thousands of articles about real estate. And this was just after the .com crash when I first started investing in real estate. And so when you read business magazines of that era, or you looked at the Forbes 400, you would see a trend, which is that many wealthy people are heavily invested in real estate. And so that was just an area I wanted to go with my career.
Okay, okay. All right, sounds good. Yeah, I agree. When you look at where a lot of the wealth comes from in the world, the top percents are at least partially in real estate and some private equities, which can kind of be the same thing in some ways. So I know your name from Beal Property Management. I know you do a whole lot more. We're going to get into that. But at some point, you began a property management company or started one. Tell me and the listeners a little bit about that.
Yeah, so in 2002, when I purchased my first property, that's when the property management company was formed.
Okay.
It was just managing 5 apartments in the beginning. And then 2 years later, I bought a 30 unit. And then we also, my father and I bought a building in downtown Ypsilanti that we renovated into 5 units as well. So the first 3 deals were all self-managed through the property company. In 2014 or 2015, I was managing a couple hundred apartments that we had purchased throughout the foreclosure crisis, and other people started asking me to manage their properties for them. And that's when we started managing properties for other people and started putting together real estate deals that investors could invest in. And that's what kind of increased the property management company to what it is today, where we manage 3,100 apartments, single family homes, and office spaces, many of which I have a 100% ownership of, many of which I have a small interest in, and then we also manage properties for other people. So if you bought a single family home today in Ypsilanti or in another city that we managed, and you just wanted us to manage that house, we would charge you between 8 and 10% of the rent to manage it for you. And we manage several hundred single family homes like that.
Nice, nice, nice. So I think we invest in some of the same areas. That's how I recognized the name for years ago, even before I got into real estate investing. But when I think about property management, even now, I think it can make or break an investment. Can you tell us what the role of a property manager is?
Yeah, so once the transaction is completed and the property is owned, the property manager takes over, and they are critical to all aspects there going forward. They fix up the property, they market the property, they show the property, they take the rental applications, they review the rental applications and screen them. Once a tenant is approved, whether it's an office space, single family home, or apartment building, the property manager will move them in, sign the lease, collect the move-in expenses. And then the property manager is responsible for the landlord-tenant relationship going forward. And that could last many years. And if you're doing a good job with your maintenance and you're doing a good job with some of the other aspects of property management, the landlord-tenant relationship should be a decently healthy one. You guys are on the same team. You both need each other to be successful. And so that's what property management is. Property management's extremely tough business, and you're not always treated well by everyone that you work with, but it can be very rewarding as well.
Yeah, I follow you there. Extremely, extremely important, tough business. A thankless industry, probably. You don't hear from anyone when things are going fine, and when things are going bad, that's when you have to be there to step up.
Yeah, it can be tough, but it can also be very rewarding. For instance, I have a young woman who I've rented to for 6 years in Ypsilanti. She's now graduated from Eastern Michigan University. She's getting married, and her fiance are buying their first house.
Awesome.
And she said, "Hey, Stewart, I know I just signed my 6th lease or 7th lease. Can I get out a couple of months early because I'm buying this house?" And I said, well, hey, do me a favor and help me spread the word that this apartment's coming available. And if someone applies that has a high credit score and is qualified, sure, we'll let you out of your lease. And that's amazing that you're buying this house. And I'm glad we were able to help you in your life this way.
Awesome, awesome. Yes, 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 awesome. So you talked about how hard it is. What are some, you've been doing this a long time, like you said, started after the dot-com back in 2002. To be in business that long, and you're into some other business ventures too, we'll get to, but to be in investing and particularly property management that long, you must be doing something right. What are some things you'd say are good tips or good things that to look for in a property manager?
Yeah. So when I hire a property manager, I want to hire someone that has a high typing speed,
Okay.
that is good with email, that is living in 2020. And by that, I mean someone who is proficient at social media, someone who's proficient at software, computers, uh, someone that's proficient in property management software. And then I want someone who doesn't up the crazy when fronted with crazy. That's really important. So they need to be a calming presence. They need to be a steady hand, because they'll be confronted with crazy situations and people that are having crises. And if you give the person back as much as they gave you, it'll
Explode.
explode. You know what I mean? Like, if someone starts yelling at you, I need the property manager to respond calmly and bring the level down.
Yeah.
And at Beal Properties, we try to do as much as possible using technology. I don't speak to residents on the phone for the most part. It's all done through email. Email's really good because it documents everything, and also it allows you to provide better customer service to the residents than you would on the phone. Because when a resident calls you on the phone, sometimes you're on the phone for 18 minutes, 21 minutes, 25 minutes, when all it was, hey, I have a question about my lease. And when they email you, it takes 30 seconds to respond as opposed to being on the phone for 21 minutes.
Yeah.
So that's what I look for, and that's how I approach property management. And then if you're gonna buy a real estate investment and you're gonna go out and hire a property management company, you need to make sure you actually interview the person that's going to be assigned to your property. You need to interview the actual property manager, because what will happen is you'll meet the owner of the property management company. You'll say, wow, that owner's a great property manager. But the owner of the property management company is likely not going to be the person managing your property. And so you're going to want to get comfortable with the actual property manager.
Nice. I like that. I'm taking some notes here to reference back to here. We'll put it in the outline of the show notes too for the listeners. So that's really good. So communication skills, I heard calmness, and then really 2020 communication skills. So you talk about using technology to communicate with the tenants, which to me brings efficiency. Like you said, you're on the phone with them. Nothing wrong with the phone, but if you're spending 20 minutes, 30 minutes on the phone with someone and ask a simple question, you can only get so much out of that person's day.
Yeah, so what I was going to say is a property manager needs to manage a couple hundred apartments, or 200 single family homes or something like that in order to make the numbers work. And so the person has to be very efficient, very, very efficient.
So that makes sense. Yep, that makes sense. Because like you said, the property manager's getting a certain percent, and the percent will vary depending on the property. Like you said, single family 8 to 10%. But in order to make the business work, it's gotta scale beyond just that one single family property. That makes sense. Now, what's ironic here is that Stewart is like I said, we kind of invest in some of the same areas. He property manages and also invests and does some other things we're going to get to in a moment in some of the same areas. Stewart's actually in one of the areas that he invests in and where his office building is. Tell the listeners where you are now.
Yeah, so I'm sitting outside in downtown Ypsilanti right now. I am in front of Beezy's Cafe, which is in downtown Ypsilanti, and my office is across the street, and my house is a couple blocks away, and we manage a lot of properties in this area.
Okay. Awesome time to be out here in southeast Michigan this fall time of year. Some seasonably warm this week, which is nice. All right. So speaking of Ypsilanti, so you manage in some other areas too. You invest in some other areas. What areas are those?
We have uh, investments in the city of Monroe, the city of Toledo, which is in Ohio, Lansing, Kalamazoo, and then in Ohio we've got Akron and Canton, where we've made some investments, and I've started investing in North and South Carolina and Georgia as well
Okay.
through one of the real estate syndications that I participate in. And my business partner runs that operation, and I'm mostly just an investor. But we primarily invest in Ypsilanti, Michigan, because that's where I live, and the best way to manage properties is to live by them and see them a lot and visit them routinely. And so that's where I primarily invest.
Okay. I was going to get to why the kind of southeast Michigan, Toledo is kind of northwest Ohio, Canton, Akron gets a little bit further east in Ohio, but I was going to ask why that area, but Ypsilanti because you're nearby and Ohio and some of the southern states, why?
Yeah. So when people ask me where do I invest, I say within a 1 hour drive of my house.
Okay.
That's where I primarily invest, and that's so that you can hop in your car and go see the property whenever you want. And if there's a problem, you can get there quickly, and keeping efficiencies. We employ a leasing agent who drives all day, showing apartments and homes, and they just drive in a big loop. Detroit in the morning, Monroe midday, Ypsilanti in the afternoon, and the next day it repeats all over again, showing properties. Our investments in Akron and Canton, that was a bit of a stretch, and very admittedly, those didn't go as well for us because they were farther away, and I wouldn't do that again. Um, I'm going to stick within a 1 hour drive of my house.
Okay. Okay. That makes sense. Now, we've been talking about property management. You've been talking about investing also. So what do you invest in personally? I know you do we're going to get to syndications in a moment. What do you invest in? What type of properties?
Yeah,
What type of
so
assets?
I and some of my partners, we invest in anything that's a good deal. So I've never done self storage. I've never done land, but we've done single family homes, duplex, 3, 4, 5, 6 units, 30 units, 60 units, 90 units, 154 units. Um, we purchased a 468 unit apartment complex. We actually just sold that, and we purchased office buildings and medical office, regular office, and then we've done some historic redevelopment projects where we buy an abandoned, vacant building and renovate that. I also purchased a warehouse, and I also recently purchased a church. I haven't quite figured out what I'm going to do with that, but just good deals that we come across, constantly looking for deals.
Awesome, awesome. I think I saw the church. I think I saw you mentioning that in one of your social media publishings, I think.
Yeah.
All right. Awesome, awesome. Okay, so talked about where you invest, what you're investing in. So you've been doing this a long time. We talked about 2002 is when a lot of it took off after the dot-com boom, but even before that. So I've seen some of your stories, the one about Huntington Bank, and it really just was due to persistence, I think. Persistence, maybe a little bit of being in the right place at the right time, but kind of having some goals and being persistent. Tell us, tell us a couple of those stories. I think I try to motivate the listeners to let them know they can do this. It's called the It's Attainable Real Estate Investing Show. But tell them a little bit about a couple of those stories you've gone through.
Yeah. So real estate investing, if you're going to be doing it a lot, if you're going to be doing it full time, you should be constantly exposing yourself to opportunities and putting a lot of chips on the board, so to speak. And the beauty of real estate is that long term, those will almost assuredly work out well long term. So even if it's not the best deal today, even if there's risks, as long as you work hard and manage it well, it'll likely pay off. And so I've done now over 250 real estate transactions. Some have been not good investments. Most have been good investments, but not super grand slam performance. And then since I've done so many, I have 25 to 35 just absolute grand slams where we hit it out of the park. And that's where those stories mostly come from. I can tell you about a single family house I invested in 10 years ago, and it's been fine and it's doing fine. But the stories people really like to hear are the grand slams, and some are pretty wild. The one you're referring to about Huntington Bank is in 2009. I was on Craigslist and I saw that a 60-unit apartment complex was for sale in Toledo for $600,000. And $600,000 for 60 units is a very good deal. So I immediately called them and got into a relationship with the seller. And the seller admitted that he was being foreclosed upon by his bank. And so I approached the bank and I said, look, don't foreclose on him. Just make me a guarantor on the loan, and I'll take over the loan and I'll manage this building going forward. The bank wanted me to put up $250,000 in a reserve for repairs, and I didn't have that money. And I wouldn't have wanted to do that even if I did, because I want to be flexible with my cash. And so I wasn't able to do that deal. And I went on doing other deals. When three months later, the banker called and he said, Stewart, I've got a horrible problem. All of our loans are going bad. We foreclosed on over 100 properties. It just so happens we foreclosed on the property that you wanted to buy. We forgot to pay the water bill, and the water shut off to the property. So the tenants are in the bank lobby right now, up in arms about the water being shut off to the property. So he said, wow, if you go pay the water bill, we'll give you the property. And I was involved in a situation in Detroit where one time I was talking to an owner and he owed the water department like $100,000. And so I thought when this banker said, if you pay the water bill, I was going to call the water company and it was going to be some large amount. It would still be a really good deal, but I thought I was going to be a large amount. When I called the water department, they said that the water could be turned on for $4,200.
Wow. So
I immediately drove to the water department and paid the bill. And then the bank deeded the property to me for the water bill, $4,200. And so I bought a 63-unit apartment complex for $4,200. That's
crazy. That is crazy. So even a vacant building for $4,000 is for $4,200 would be amazing. But you got to occupy, or at least partially occupied, 60 units for that. And how much is it worth today?
It recently appraised for $1.8 million.
Wow. Talk about a return on investment, $4,200. I'm sure you put money into it along the way to make it more valuable to the tenants, give them pride in where they live and such. But wow, $4,200 to start and $1+ million today. It's crazy. So depending on your goals, like you said, you've done a lot of deals. Some of them worked out, some of them haven't. There's been some in between. You've had 25 or so grand slams. Depending on your goals and the goals of others, like you don't. I tell the listeners, it's all about your goals. You don't need a lot. You don't need 25 grand slams. You don't need all 250 transactions to work. You just need whatever works to meet your goals. So it's awesome that you've had some very good experiences along the way. All right. So you mentioned syndication. So we know property management. You do some investing on your own, you and your partners. You talked about a partner in the southern, some of the southern states, and you're just an investor in that. And I think what I read is that you have, you like you mentioned earlier, you put together some deals of your own and bring investors alongside you to kind of help them out and yourself, but kind of help them meet their goals too. Tell us a bit about that.
Yeah, so I have a business called Beal Capital. It's beal-capital.com. And we are raising $2.5 million by selling shares to investors of $25,000 each. And you can buy a share of the fund, and we will invest the $2.5 million in apartment buildings. We have purchased a 14 unit in Toledo, a 37 unit in Dundee, Michigan, which is halfway between Ypsilanti and Toledo. And we are closing next month, well, hopefully this month, on a 60 unit in Monroe, Michigan. And then I've entered into negotiations with a family who owns 100 apartments in Ypsilanti to purchase those. I hope to get into a contract with them this month, and that will be what this fund buys. It'll be about 200 units
Okay.
that this fund will own. And then early next year, I'll launch another fund to do it again. And investors come in, and I put a lot of money in as well. So they're investing like right alongside me.
Okay. So most people think of investing, all you see on TV. You don't, first of all, you don't see real estate on TV. So most people think of investing with what you see on the stock ticker, what you hear on the evening news, afternoon news. They think about equity investing, so stocks. How is, when you say someone puts in, let's say 25K minimum into your $2 million fund, how does that work in terms of investing and returns, and how does that work?
Yeah, so we have what's called a 7% preferred return. So before I earn any money, investors earn 7% on their investment.
Okay.
Then after they've earned 7% on their investment, we have a split. So any return above 7%, investors get 70% of that, and I get 30% of that. And that's how I get paid to
Okay.
do this investment. In addition to getting a return on the money I personally invest. And that's how many real estate syndications are set up. You can tweak them a little bit, and there could be some deal fees in there. There could be some money management fees and other things like that. But that's the basic way a real estate syndication is set up. And when you invest in a real estate syndication, you're trusting the operator fully with that investment. You have no control most times, and you don't even get to decide what they invest in. They tell you approximately what they'll invest in. We're going to invest it in apartment buildings in Michigan and Toledo, Ohio. But it's not like you're investing for yourself where you get to pick the addresses and the purchase prices and that sort of thing. So it is like investing in the stock market, in which when you buy a share in Ford Motor Company, you don't get to tell them what they should do. You just trust them to do a good job and earn a return on your investment. And that return on the money you invest is pretty similar to you investing yourself. You get a benefit of depreciation. You get a benefit of appreciation. You get a benefit of paying down that bank loan over time, and then you'll also get cash flow from the property. And if the property's ever sold, you'll also get a return on that transaction.
Awesome, awesome. So most people think when you invest with someone, the investor's getting all the money, and you're just getting a small part. And that may be the case because the investor, like you gave that Ford Motor Company example, they've obviously got a whole company to run, so it makes sense that some of their profits maybe come before yours. But in what you're talking about here at real estate investing, it's a little bit of the reverse. So they get 7% preferred return, so they get their return first, their target return first. And then even after that, they get the share of the fund. So they get 70%, you get 30%. So the advantage really is to the investor when it comes to real estate syndications or real estate investing, kind of like your fund.
Yeah, that's correct. I do charge I'm a real estate broker, and I try to do transactions without involving another real estate broker. And so I try to get the seller of the property to pay my broker fee. But in some cases that doesn't work out. And so then I do charge the investors a broker fee. So that's another way I make money in the front end, but it's no more than a real estate broker would charge normally. In fact, it's actually a lot less. Our average is 2%, whereas a real estate broker would try to shoot for more like 5%.
Got it. Yeah, so that makes sense. The broker has to be in the transaction to get the job done anyway. So you're consuming no more and actually less than what a broker would have to do anyways. And
yeah, all four deals in my fund, all four deals, the one in Toledo, the one in Dundee, the one in Monroe, and the one in Ypsilanti, are all done off market. No one else had an opportunity to buy these. I'm negotiating directly with the seller, and therefore we're getting a good deal, and we're not competing with anyone.
All right. So we're almost to the end of the show here. What you mentioned, one thing, off market. Explain that.
So the best way to purchase a piece of real estate is to develop a relationship with the seller directly before the seller thinks of selling it, and before the seller thinks of hiring a real estate agent or real estate broker to sell that property. Of course, the seller needs to have some skill. If they're not skilled in selling, then they should hire a broker. They should hire a real estate agent. But if you can get in there before that agent advertises the property statewide, and you can develop a relationship with the seller where the seller actually likes you and wants to sell to you, that will make for a very pleasant real estate transaction, and you'll get a better deal because the person won't have to pay a real estate broker. That's the first reason you'll get a better deal. And the second reason is the seller is not going to receive many offers and bid it up. So for instance, I lost out. I don't like losing, but I lost out this week on a real estate transaction. The seller listed the property for sale. I offered $40,000 over list, but two people offered $80,000 over list.
Wow.
And I lost out on that transaction. And so I walked away from that thinking, man, that was really a waste of time, because the seller received 10 offers for the property when I could have been working on my other deal where I'm working with the seller directly. And so that's what I'm going to focus on next week is working on with this seller directly and not have to compete against 10 other people.
Yeah. So the competition, the price, and then I guess probably when you're talking with the seller, you can kind of get an understanding of exactly what it is they want, whether it's dollars or some other type of agreement. Okay, that makes a lot of sense. All right, so we met Stewart Beal, the property manager, the investor or sponsor that lets other investors or people who aren't even interested in real estate invest in real estate alongside him. What's next for you?
Yeah, so I'm going to be focusing on Beal Capital in this first fund. We've got this 60 unit under contract, so that's what I'm going to spend the rest of my month working on. And then I am, like I said, in negotiations with this family who owns 100 apartments, so I'll be working on that as well. And any of the listeners can check out my website. It's beal-capital.com. They can contact me through that website if they're interested in investing alongside me. And then anyone's also free to friend me on Facebook or LinkedIn, and we can keep in touch that way.
All right, that was going to be my next question. How can listeners get in contact with you? All right, so as we close out the show, just a few final questions. What are you doing today in your PM or property management business and your investing business that you were not doing when you first started? I know I heard obviously the 2020 communications probably for property management, but go ahead.
Yeah, it's all about technology. The advertising has changed a lot. We used to purchase classified ads in the newspaper. Obviously mostly it's on social media now. We do all lease signings and all payments digitally. So we're not collecting cash anymore. We're not collecting checks, processing checks. Everyone pays via ACH or what's called cash pay. And that's an accounting wonderful thing, because people can pay the money and it just goes directly into your bank account, but it also books it in our system. So we save a lot of accounting tasks. And then we're also working with artificial intelligence, where we have a program through Appfolio where tenants contact us and the artificial intelligence communicates with them in the beginning stages of their searching for an apartment. And that's something I'm really excited about.
Oh, awesome. Yeah, yeah, I'd like to talk with you about that. That's pretty awesome through Appfolio, it sounds like. Okay. All right. So when it comes to investing, why do you think most never get started?
Well, most people don't start investing in real estate because they're working a full-time job and they're raising their family, and it's another big thing to take on, and it's difficult to do if you're not really focused on it. And that's why the real estate syndication is a good thing for investors, is they can invest in real estate without doing any of the work, and I'll do all the work, and I will charge them for that, for doing that work, but it's a fair trade, because that person can continue focusing on their business and doing well in that business, and then we'll get returns on the real estate investment.
Okay, okay, that makes sense. I was going to ask one question, but I think you just answered it. Why would you encourage others to get started? And if so, in what way?
Yeah, so the way I would encourage a young person to get started is not to invest in real estate syndication and go out and buy a single family home, a duplex, triplex, fourplex, where you can get a 30-year traditional mortgage like you would on your single family home. The interest rate's going to be very low. It's going to be pretty low risk as long as you're buying, close to your house and you can check on it. That's the way a young person should get involved. And then someone that's more established and doesn't have as much time as the young person, perhaps, they should invest in a real estate syndication and let me do the work.
Awesome, awesome. All right. All right, Stuart, it's been awesome. I appreciate your time. I'll let you get to that beautiful day behind you and get back to running your business and take care of that 60 unit you're working on there for Beal Capital.
All right. Thank you very much. Thanks for having me on the show.
Wow. Stuart shared a lot with us, a lot about his journey and about his business today. Can you believe he started with lawn care, made that into a real business and a company that he sold, took the proceeds from that and not just spent it frivolously, but actually spent it on real estate. Why real estate? Because he found that the most wealthy seem to have invested in real estate. So from lawn care, I'm looking at my notes here, from lawn care into real estate, starting with a property management company. A property management company can make or break any real estate investment. So I'm glad he shared a couple of tips there, and I hope you took some notes too. And in the midst of property management, really his first investment was a house hack. I think we're going to have to talk about house hack in a future show. If you're young and don't have the responsibility of others like children or a spouse, a house hack can definitely be for you, an entryway into getting into real estate, even if you do have responsibility for others such as family or children or a spouse. As long as you have their support and they're strongly beside you and understand what investing in real estate today can mean for tomorrow and long term, you can do it. A house hack can work for you too. So thinking more about Stewart's property management company, you talked about today they focus a lot on technology with their communication. I called it 2020 communication. So technology bringing efficiency. And they also use technology in their marketing today, thinking about classified ads in the newspaper to probably for sale signs or for rent signs in the newspaper to seeing so much done electronically nowadays. And lastly, we talked about Beal Capital, which could be a benefit for anyone, but certainly a benefit for someone who's busy with their everyday life, but understands the value of investing in real estate right now. So if you have questions for Stewart on anything we talked about today, you can reach him at Beal-Capital or Beal-Capital.com, Beal-Capital.com. And if you have questions for me or about the show, Always, I'm at neelyrealty.com/engage. That's NILEE realty.com/engage. I hope you enjoyed this show, and if you did, share it with someone else. And I'll see them and I'll see you next time on the It's Attainable Real Estate Investing Show.
You have been listening to the It's Attainable Real Estate Investing Show, sharing transparent knowledge on investing and the powerful impact real estate investing can have on your wealth and lifestyle. Follow or subscribe to the show using your favorite podcast app so you'll know firsthand when a new show is released, or visit neelyrealty.com/podcast and see the show there. That's NILEE realty.com/podcast.